Okay, here we go. Well, the nature of this webinar or this little meeting is, are you ready to buy a home of your own? And I'm very fortunate to have Monica Dedmon of Jane Bird International Properties with me to work on this. We're going to spend a couple minutes on each slide and we'll try to move fast. But Monica, say hello.
Hi guys, thanks for joining us here. I'm super excited to see if you guys are ready to buy a home.
All right. I'm Mike Durr, Kingwood Mortgage Guy, and we're just going to get started because we appreciate your valuable time. So, Monica, tell us what we're going to cover.
Well, we're going to, hit the highlights of Are You Ready to Buy? We're going to talk a little bit about what buying versus renting means and how that affects you economically. We'll talk about some of the biggest reasons people don't buy homes. We'll talk about credit and what qualifies. We'll talk about incomes and ratios. Mike will do that for us. Good fun there. And then some important things about where you would buy and how that affects your lifestyle.
Excellent. All right. So now you know or not if you're in the right place. So let's just get started right away. So are you ready to buy? Well, one of the things that is a big determination on whether you're ready to buy or not is if you have stability in your job, of course your income. It inevitably, even if you're doing a deal where it's a zero down deal, you need to have some money, whether it's for closing cost or just in preparation of the challenge of putting a household together. So if you don't have any money saved, it's hard to do this, even if you're doing a zero down loan. The other part, important, is committed to stay in the area that you're going to be buying a home. Guess what? You want to be close to and work in pretty much a proximity of where you work and play and hang out. Then committed to consistent maintenance. And this is one that I had trouble with because I'm not a good maintenance guy or handyman. You got to have somebody to do that kind of stuff so it's important. And then finally, well, not finally, you got to understand the responsibility, and then you got to have credit that's qualifiable. Monica, did I miss anything?
No, but the one thing I can say about committed to consistent maintenance is you just got to know the right people to do that for you, because I can't think of anybody who loves maintenance.
Yeah, I get that. And I have a friend that says it's not what, it's who. Who can do it? It's not what you get to do. All right, you're up.
All right, so let's talk a little bit about buying versus renting and how that affects you. First thing, when you're buying a home, you're going to get some appreciation gain. As the years move on that you're living in a house, the house is going to go up in value. When you do that, that's called appreciation gain, and so you're making some money there. Amortization gain. Mike, can you explain that one for us?
Well, what's happening when you're paying down your mortgage, you're paying down principal with each payment. So what happens is, even though the properties generally appreciate, not always, but they generally appreciate, the best thing that happens is the note or the balance of the mortgage is going to go down consistently based on what kind of mortgage you have.
And then you've got the net gain depending on the number of years you live there. And so that's going to be the combination of the appreciation gain, the amortization gain, and then maybe any extra payments that you guys have made on the mortgage. Sometimes paying as little as $50 to $100 a month can make a huge difference, right, Mike?
Yeah, it can really. What we like to say is that if you paid an extra payment a year, so let's just say that your payment was $1,200, so you paid an extra $100 in each of those payments, so you'd end up paying one whole payment extra a year. That would cut off 8 years, a little over 8 years of your mortgage. So it's pretty cool math when you do it that way.
Absolutely. And then there's the tax benefit. You get to write off interest and some other things from owning a home. And then, of course, you can always talk to your CPA about that. But great tax benefits. Just kind of in the lifestyle things, buying is settling down. Sometimes we're ready to do that in life. Sometimes we're not. If you're not, renting is keeping your options open. It's a little more fancy-free lifestyle. If you've got that free spirit, you can move around every 6 months. But, hey, moving is stressful. So, it's nice to plant some roots. Renting initially requires less money, and that can be really appealing, but it actually can cost more over time. So how long you want to live in the same area, in the same house, should affect whether you want to rent or buy. Like I said, renting just kind of costs more in the long term. Mike, can you show us that slide that breaks it down?
Yeah, but before I do that, I want to tell you something that
Sure.
regardless of whether you are paying your mortgage or paying rent, you're paying somebody's mortgage. So just so
Ah,
you know that. And a lot of people consider that if you're going to be paying a mortgage, then you ought to be paying it for yourself. But yeah, there's a very cool software that I have access to, and it's basically on a buy versus rent analysis. And the one that I put together real quick, and this is, I'm not going to demonstrate the software, but I wanted to show you the slide, is that it shows the buying, in this particular case, a house that's about a $250,000 house, what the payment would be, and an equivalent rent for a nice place. And obviously, if you're paying $1,848 a month in rent, that's probably a pretty nice apartment, right? But you could also be paying that same amount of money and buying a $250,000 house, where in Texas, in Houston, $250,000 house is a pretty darn nice house also. It talks about the cash flow difference. It talks about what we mentioned a minute ago, the appreciation gain and the amortization gain. And there's some parts of it that go below this, but we can plug in any numbers you want, and it just kind of gives you some idea of what the difference would be. So I thought that would be good. It's also a great reason to call us. And one of the things that I wanted to make sure that you notated is that Monica and my phone numbers are going to be at the bottom of most of the slides. So love for you to call Monica, and then Monica is going to say call Mike, or if you call me, I'm going to say call Monica. So anyway, that's enough on that. Any questions on that, Monica?
no, I think this is an awesome slide, especially how you showed just the different gains, and that's like in a 9-year gain. Is that what I'm seeing?
Yeah, that's a 9-year.
Wow. Yeah, so not only is it a matter of do you want to pay somebody else's mortgage, but do you want to be having those gains? It's really an investment in your future.
Yeah, just this little chart part here, the navy part is the mortgage, the purple part, I guess if that's purple, is the rent that goes up, because rent tends to go up every year. And you
Every
don't get
single year.
Yep. Okay, let's move right past this. I think this one's mine. Biggest reason people don't buy. Well, the first 3 reasons are all the same. Money. Most people, there was a survey done back, I think it was in 2003, where it was an expansive survey about home buying. And what they did is they came up and they looked at what was the biggest reason people didn't buy, and it was like 60% was money. And it's saving money. It's hard to save money. It's hard to accumulate enough money to do this. Usually when people buy, they're either getting a gift from somebody, or maybe they're waiting to sell something, but it's all about having enough money. The credit is obviously a factor. If you've had some kind of financial trauma in your life, then the good thing about credit, though, is you can heal bad credit. It doesn't take that long to get over some kind of credit mishap. And then the other thing is, a lot of people they misunderstand how easy it is to buy a house. I mean, it really is. Of course, easy is not, it's relative. If you have a steady job, if you have a little bit of money, and you have decent credit, then it's pretty easy. A lot of people believe still that you need 20% down. We don't. And you can get a loan today with USDA loans, 0% down. There are other programs that we have access to where you can put 1.5% down. And then the standards are the 3% for the home, home ready, and there's another one for conventional, and then FHA is 3.5% down. So we think we've got pretty good answers for the money thing. So a lot of people, I don't want you to hesitate. If you have no money and you have no side of money in your future, then you probably need to wait. But if you're going to be getting 3, 5, 6, 7, 10,000, you'll be buying a house if you meet these other criteria.
Yeah, that's what I was just going to say, is that money is sort of definitely an obstacle for people, but just having a great lender, a good realtor, somebody that can help you navigate some programs, just some like buyer's assistance programs, help you negotiate some seller's costs. There's some different things that you can do to help bring that money down into to a number that most people can do.
Yeah, there really is. And there's a lot that you can do that we're not going to talk about on this, because it's not the reason for this particular one, but we'd love for you to call us so that we can give you some of those specific things that are just for you and your situation.
Absolutely.
All right, what the heck is this one? This is credit.
Yeah, ooh, fun.
Credit.
Right, this is the big scary, right?
Yeah.
So credit.
A lot of people worry about this, and what qualifies? Well, each loan program has a little bit of a different qualification, and we have programs where you can get qualified for a home loan with a 550 FICO score.
Yeah.
Now, when I'm talking about a 550 FICO score, that's a rough credit report, and it's somebody that's obviously been in some kind of financial trauma, and maybe they haven't figured out how to fix it. And that's one of the things that I like to think that I bring to the table is I'm a credit scoring expert. I mean, I'm a bona fide, I know what makes the stuff bad, I know how to make it good, and I know how we can do it, get it changed quickly. So the other thing is what qualifies? Well, idealistically, we'd be at above 600 FICO score. 580 is okay. It just, I will tell you, and I'm not going to blow any smoke at anybody, 580 is hard. Anything 580 to 599, the underwriters are looking for a reason to deny those loans. But once you get to 600, it's pretty much automatic if you meet the other criteria, like the one that we're going to show you in just a minute about the debt ratio. Poor, it depends on what you relate to poor. Conventional loans are harder than FHA, but anyway, we should just talk about your credit. And can you qualify with poor credit? The answer is absolutely yes, you can.
Yeah, and the other thing is people think that it takes a long time to heal your credit, and depending on how bad the situation is, it can take longer. But, a lot of times, even if you're in that low to poor, the 580, 560 credit range, you're a couple months away from getting your credit up, just talking to a good lender and making a good plan. And so even if you're feeling dejected because you think you're in that lower credit score, don't. Make a phone call. Let's make a plan for you.
Well, and you hit some points there I think are very valid, is that the time it takes to change your FICO score is amazingly fast compared to what people believe. And all you've got to do is you just got to know the right people that can show you exactly what to do so that we can affect these things very quickly. Now, on the same note, I've had people that I've worked with for over a year in an effort to help them get their credit back to a position where they can buy. But most of the time, it happens a lot faster than that. It's just, the point is that we're willing to work with you over time so that you can put yourself in a position so you can buy.
Absolutely. But even a year in the idea of buying a home and living there for 10 years is just a small blip. It really is.
Yep, that's right. Okay, so income and debt ratios. I'm going to take this one too because I did a little video that I thought would maybe explain it better than I could trying to do some magic here. So let me go to the next thing here. And I'm going to click there. Let's see if it works. Okay, this is my attempt to explain the debt ratios. And the debt ratios are a combination of calculations based on the gross income from the two borrowers in this particular case, and the cost of the mortgage. Here's the mortgage payment anticipated, the projected homeowners insurance, the projected taxes, and the projected homeowners association dues, and the total down here. So they're going to take this number and compare it with this number, and that's going to create a ratio that is the top ratio here. So the back ratio is kind of the same thing, only it's going to be added. Again, you start with the gross income here, the cost of the mortgage payment, and the cost of all the other debt that shows up on your credit report. And that makes the back ratio. When the back ratio is below the guideline, then you qualify. If the back ratio is above the guideline, or a lot of times at the ratio, you don't qualify. So that's kind of one of the key calculations that we look at. When your credit scores are good, your income is consistent, and you fit within the ratios, this tells you how much house you can buy. This is the tool that we use that indicates what you can actually buy. So hopefully that makes some sense, but obviously we're here for questions, so feel free to chime in after that. Okay, so what I tried to do is give a visual version of how the ratios work, and this software that I just did a little quick video on is when people call me and they say, well, how much can I qualify for? What I do is I plug in factors, and then we start putting in different sales prices, and that's how we come up with that number. So it's not precise. What is precise is there is a specific number that your income is, and there is a very specific amount that you'll be able to qualify for. That means the number of dollars that you spend for your mortgage payment each month. This is a relationship to that, but I can better give you a maximum amount that your payment can be as opposed to giving you what the sales price is, because taxes and insurance are pretty much kind of nebulous. I mean, they can be a lot of different things.
I'm sorry. So what I'm taking away from this is that, the less debt you have, the more house you can buy, right?
That's right. If you have no debt, boy, you're going to be surprised at the amount of house that you can buy. That's right.
Absolutely.
All right.
Okay.
Where do you buy?
Yeah. So now we've looked at credit, we've looked at income, we've talked about ratios, and you're thinking, okay, I can do this. Now we have to talk about some big things. Where do you buy? So whether you're ready to rent or buy, it matters. What matters to you, right? Travel time from work to home, or from work to your play activities. Do you play tennis? How close do you live to that, huh, Mike? For me, it means a lot to be in close proximity to my children's school. What school district they're in. Community amenities. Do you guys like to walk a lot? So you want to pick a community with a green belt, an active community. Do you like to go to the theaters? Maybe you want to be closer to downtown. There's many different things to consider, and whether or not you can find a home that's going to meet your income and payment requirements in that area. Another thing that people think about when buying a home is HOA or no HOA. Do you like that suburban feel? Do you like the more unrestricted country feel? Do you want horses? Just what kind of lifestyle do you plan to live? And then we can help you find a home that's going to work in that.
Well, I tell you, I was resonating on the ideal of being close. When I moved to Houston, or when I never moved to Houston, I moved in Kingwood immediately when I moved here. And I had jobs, though, that they were about an hour away from Kingwood, we're in the Northeast. I had a job in the Southeast. I had a job in the Northwest. And that hour commute, I just assumed that was what I was going to have to do. Since I work now in Kingwood and I live 5 minutes from my house, I'm telling you that commute is an amazing benefit. So it's really an important thing. And if you haven't considered it, don't get me wrong, I love Kingwood, and I encourage everybody to live in Kingwood. Well, maybe not everybody. No, okay, everybody. But the commute to work and play and fun and all that kind of stuff, it's a big deal.
It is. We moved from the Pasadena Deer Park area to Kingwood to be closer to our Saturday night activity, because traveling 45 wasn't that much fun, so I totally get that.
Yep. Okay, why is this such a huge question? What is the question?
Why? Are you ready to rent, or are you ready to buy?
Oh, that one. That's right. I forgot about it. Well, here's why. Because it's a money play. I mean, really, when you're going to make a commitment like that, you're committing your financial self, you're committing your time to keep the property up, and you're gambling a little bit to know if you're going to appreciate or if it's going to depreciate. And the one thing I'm going to tell you is it's not a slam dunk that the property will always appreciate. There are times when you buy a property and just stuff happens where the market deteriorates. Now, if you stay in a house long enough, I'm convinced that you will win, and many times you can't. There are things that happen. But this is one of those things that it's one of what I see, and the reason that I'm so jazzed about being in the business that I am is I get to help a lot of people change their financial life. And if they're a little savvy and they choose a great realtor to help them choose the right home in the right neighborhood, in the right place, they'll come out a huge winner in their life financially. So it's a huge, important a question. You got to pick the right people to help you. You got to put all the advantages on your side. And if you do that, bad stuff still happens, but you're going to have a much better chance that you're going to win that the financially life-changing event when you sell and go into another home.
I also think it's a huge question because, and like I covered, proximity to where you live and work and how that affects your lifestyle. Does that give you more time to be home with your family? Does that give you more time for the activities that matter? Because quality of life, I mean, it really matters. And you can achieve that in either a rent or a buy situation, either one. But, just thinking about where you're going to live and how much you're going to pay, and if you're going to be paying somebody else's mortgage or yours, does that meet your goals and affect your lifestyle?
Yeah. Well, that was the reason I guess we put this question in.
Yeah, absolutely.
But here's what we covered. Buy versus rent, that's a good choice to have. Biggest reason people don't buy is money, credit, what qualifies. I went over that briefly. Income and ratios, and where do you buy? And so, we didn't plan this to be a full tilt explanation of everything you needed to know about buying. What we did plan to do is we wanted to make sure that you had access to us, and you've got Monica's phone number on this slide. You've got my phone number. As a matter of fact, I'm going to go right past this and just say, this is how you get in touch with us. And we would love, love, love the opportunity to answer any questions that you might have. And that is really the reason we put this on, just so that we could give you an outlet to find out the truth.
Sounds good.
All right. Well, Annika, any final last words?
No, just, Mike, you're so good at what you do, and you've done such a great explanation of credit and income and ratios and things that just are scary to people and make us maybe afraid to take that first step. So thank you so much for letting us know that you're here to help us. And guys, if you need anything, you have any questions, maybe you just even kind of want to do a quick tour of some homes to get a feel for something in the area, give me a holler.
That'd be awesome. Okay, guys, we're going to shut it down. This is a preview to the live event that we're going to do very soon. Just want to thank you. Be sure and contact us, and I'll talk to you soon.